Welcome back. The future of financial advice. Forbes magazine out with its first ever list of millennial wealth managers. The report highlighting how the next generation of advisors built their businesses amid the worst financial crisis since the Great Depression. Joining us right now are two members of that list. UBS financial advisor Rachel Gottlieb is here, and Merrill Lynch senior financial advisor Vikas Mohindra. Good to see you both. Thank you so much for joining us.
Thank you.
So let's talk about this. Vikas, you started in the business just months before the stock market hit rock bottom. What was that? When was that?
Early 2008 is when I started.
2008, when we were right in the middle of the worst financial crisis ever.
Oh, yeah.
And then what happened?
So, at that point, I was just in the midst of Merrill Lynch's training program, and we really started to focus a lot on the idea of goals-based financial planning. And I really got educated in the different skill sets that involves, and I started to build my practice based on that founding principle.
And Rachel, you entered the business just a few years before the actual crisis hit. Did that determine how you approached your business?
So I started in 2002, and after the tech bubble, and what I saw is that there was a big shift of the industry into diversification and asset allocation, which then later set the scene to better prepare clients for 2008, having various asset classes.
Are you looking for millennials as a clientele? I mean, we were talking during the break.
Right.
When you're already the advisor to a family business, that's the inroad to get to the next generation,
exactly.
Right?
So it's all about having generation after generation of clients. So having the patriarch of the clients, and then their children, grandchildren, and being able to help across various generations.
Because you too.
Yeah, absolutely. And I think, after I was on the Forbes 30 under 30 list, I started to work more and more with millennials. And I'll tell you one thing, it's not cookie cutter at all. Everyone's got different needs and different things that they need.
Well, when we talk about millennials investing their money, I always push back and say, well, what money? They haven't worked yet. How do we know that they have this savings or nest egg to allocate to the stock market?
Well, $2.7 trillion is going to be transferring from wealth from generation to generation, and a big beneficiary of that is going to be the millennials. So we have to be able to invest according to them, and their investment style is completely different than other generations.
Tell me about it. What is their investment style?
They're very driven by value investment. So. And they're also very risk adverse. So actually UBS has written many research reports. Every quarter we survey about 2,000 millennials to see what is important to them and to kind of survey their style of investing.
How do you see it, Vikas?
Well, I think, as I was saying, it's not a cookie cutter approach.
Yeah.
They have different needs and wants, but the approach that we've been taking at Merrill Lynch is really for education for the millennials, right? Teaching them about all the different options that they have and helping them figure out what is the best way. Do they need a financial advisor? If not, what part of the enterprise could they possibly work with?
So what do you do differently than perhaps the advisors who trained you did back in the day?
I think that fundamental principle of the goals-based financial planning, I mean, we make sure every client has a goal, and there's obviously a lot going on in the marketplace, but each portfolio that we're building on, each financial plan is really customized to what the family wants, right? We figure out why is it that they're investing in the first place, and then we back into all the different solutions that we have available.
So let's talk about the different solutions. What are you advising clients right now, Rachel?
I mean, it's just like he said, it's very much going back to the financial plan and big picture, making sure that you're still diversified, asset allocated, and looking at your entire wealth management system. So every single financial decision we really bring back to the financial plan. We look at both sides of the balance sheet, assets and liabilities, to make sure that everything is working together in tandem.
Because you said that we really want to tell everybody what options they have. What are the options? What are the options for me?
Sure. I mean, you have the ability to take care of your own money and have a self-directed account. You have the ability of using a robo-advisor, which we've seen prevalently growing. And then you have the ability to work with a financial advisor that gives you ongoing advice for not just your generation, but for the next generation as well.
Would you put money into stocks right now?
I would. I do feel confident in the market.
Rachel?
Yes, and I mean, what we do is we have a stage in process where we come up with an ideal allocation based off of a client's needs, and then we actually put together a very systematic staging so that we're not emotionally investing. We're doing it over a period of time, so we don't just pick an entry point.
So needs being, well, I don't need the money for 20 years, or needs being, I might retire in 5 years, stuff like that.
Well, we look at things with 3 L's. So we look at liquidity, we look at longevity, and we look at legacy as the 3 buckets to investing.
All right, we will leave it there. Great to see you both.
Thank you so much.
Rachel Gottlieb, Vikas Mohindra joining us. Coming up.